Types of alternative investments. You've heard the term alternative investments, but what exactly does that mean? And why are more investors shifting their portfolios in this direction? So why alternatives matter? Alternative investments offer exposure beyond stocks and bonds. They can generate income, hedge against inflation, and create long-term growth. But not all alternatives are created equal. So here are the core types that you should know. Number one, real estate. This is the foundation of many alternative portfolios. It includes rental properties, commercial real estate, mobile home parks, self-storage, and industrial properties. You can invest directly through syndications or partnerships or via private real estate funds. Next is private equity investments. Private equity just means investing in private companies that aren't listed on the stock market. This can include strategies that are buyouts, growth capital, and venture capital. You would be investing in a company's success, often over a 3 to 10-year timeline. Third is private credit or debt. Instead of investing in owning equity, you would be investing in lending money. Examples include providing bridge loans, private lending funds, and hard money lending for other investors, where you as the investor would be the lender. This strategy can generate stable passive income with less volatility than investing on the equity side. Fourth is hedge funds. Hedge funds use complex strategies like long-term equity, arbitration, and derivatives to generate absolute returns. I have no idea how this works, so don't look to me to give you advice about investing in hedge funds. Hedge funds are typically for only accredited investors and carry higher fees and risk. Number 5 is venture capital. I don't have a lot of experience in venture capital, yet this involves investing in early stage startups. This can be high risk, yet high reward. An example would be being an entry-level investor in Uber before the company went public. This is a long game, but if you back the right company with the right founder, the payoff could be massive. 6 is commodities. Gold, which is at an all-time high right now as of November 2025. Oil, natural gas, agricultural land. These are all physical assets that serve as inflation hedges. You can access them directly by buying the physical product, or you can invest in them through ETFs and commodity funds. 7, cryptocurrency and digital assets. I personally invest in Bitcoin and believe in it. These assets include Bitcoin, Ethereum, DeFi tokens, and NFTs. These have been known to be highly volatile, but also it's a new frontier of innovation and diversification for currency. It's best used as a small part of your portfolio in the beginning until you learn more about these assets. Number 8, infrastructure. These are real essential assets: toll roads, airports, energy grids, data centers. They're very popular right now. Often these are backed by governments and offer long-term, stable cash flows. 9, farmland and timberland. These are hard assets that generate yield through crop sales or timber harvesting. They offer low correlation with public markets and long-term inflation protection. They may offer a lower yield, so don't think that you're going to get a high yield on these categories. Number 10, collectibles and tangibles. Think rare art, wine, watches, cars, baseball cards, or sports memorabilia. These are passion plays, but they can also appreciate in value over time. So final thoughts. Alternative investments come in many forms. Each one plays a different role. Some provide steady income. Some provide long-term growth. Some provide protection and safety or diversification to have exposure in multiple categories that don't get affected by an economic downturn. That's why I love mobile home parks and self-storage facilities as a category I invest in. The key is to understand how each category fits your goals, risk tolerance, and timeline. So if you want to explore these categories in more depth, download my free resource, the Alternative Investment Playbook. It breaks down each asset class, the pros, the cons, and then how to start building your allocation and investing in these. So now that you know the different types of alternative investments, check out my next video on how to create your first diversified alternative investment portfolio. I'll see you there.